Hey, it's Chris Doherty, Doherty Properties, coming to you August 7th, 2023, with a Massachusetts and New Hampshire real estate market report to help you understand what is going on. You know, I hear from agents, our agents in the industry. I hear from buyers and sellers, and they're so bewildered at this real estate market, and they don't understand exactly what's happening. And so my goal is to try to help educate you with the data so that you can really understand the truth of what's happening in your local market, okay? So really where we have been for the past couple of years is in a situation with really low interest rates. And those low interest rates really fueled a market in a buying frenzy where people could get into homes for good down payments, but that caused prices to climb, okay? And so what the Federal Reserve has done, because prices started to spiral out of control, we were seeing 20% year increases, sometimes more in different markets. Prices were climbing at aggressive rates. The price of everything, subs, pizzas, cars, prices started to climb on everything, which was inflation. For the past 10 Federal Reserve meetings, they've set one goal, and that is to control cost, pricing on homes, on products, on everything, because the increases in prices was becoming unsustainable. So how did they do that? For 10 meetings, they raised the interest rates little by little by little till they got to more than a doubling of the interest rate. So people 2 years ago were getting interest rates in the 2.5% to 3%, where today they're looking at the high 6 and low 7%, with the singular goal of making it more expensive for people to buy, weeding out a number of people so they can't buy, and then controlling cost. So how does it look, and how is it impacting us in Massachusetts and New Hampshire? So I want to go through quickly the single family, the condo market, and the multifamily market so you have an understanding of what's happening. So when I was coming to you in 2022, from 2021, we were seeing these huge price jumps, 20%. Now you're seeing a stabilization where the price increases are 3%, 2%, stabilizing. Why? The interest rate and inflation fight is working. So we're at a point where the Fed has really achieved a lot of what it has set out to do. Now, you can go on YouTube and you'll be doomsday or market crash. Cars, you can't buy any. People go to third-party interpreters who want to doomsday you. But what I do is I listen to the Fed. I listen to what they're trying to achieve. I watch the meeting. I listen to what they say. And where they are right now is they are still continuing their fight, but they have made good progress. And so how has it impacted us in Massachusetts? Okay, because the rates are up, a lot of people who own their homes can't sell and go somewhere because the rates are much higher, the monthly cost would be much more, so they're staying in place. And how are we seeing that? 25% fewer listings taken in Massachusetts and New Hampshire, okay, in the single family market. 16% fewer condos in the condo market, and 41% fewer multifamily sales in the multifamily market. Sellers don't want to sell because they have good rates, and that is the impact of the number. There are fewer listings. We are in an inventory crunch. That's why you're seeing in the city of Lowell, accessory dwellings. We need more housing, different markets. How do we get more housing? The interest rates are impacting sellers because they don't want to move, okay? Because there's fewer homes for sale, there are fewer homes that went pending. If you look at August 7th of 2023, which is today, and we compare it from last year, there are 20% fewer listings pending in the single family market, 18% fewer condos, and 29% fewer multifamilies. Why? In all those categories, there's much fewer listings. Therefore, there's much fewer homes to buy. So there's fewer that actually can go pending. If you look at closed homes in the market, the same phenomenon. There was the single family market, 25% fewer listings, 22%, 0.86 fewer closed. If you look at the condo market, 16.36% fewer listings taken. If you look at the numbers, closed is down 21%. If you look at the multifamily market, 41% fewer listings taken. You're looking at the closed number is down 14%, okay? And so what is happening is the Fed's program is really driving this market. Fewer buyers are in the market because a lot got pushed out. Fewer sellers are on the sidelines. So we're in this environment, in this market, where there's not a lot of listings and there are still buyers and they are still fighting over it, but not as many as there were. So you're not seeing these huge price jumps. If you're a buyer, what you're looking at is buy now. Prices will still climb a little bit, but you'll get the opportunity to refi that at a lower rate. That's my prediction. That's the market report for Mass and New Hampshire. I hope the market stays as strong as it has been for real estate professionals. And if you're an agent out there, keep at it. Things will improve. When rates come down, more sellers will come on. Inventory will free up. You just got to fight through the tough times, the inventory crunch. And I look forward to seeing you soon. Thanks for tuning in.